back to Golden Rule Radio. We have gold up today. Silver's following it. The dollar has fallen back down below 90. Just failed that whole trend line that we were looking at and is back down below 90. So we're now witnessing our fourth push up into the 1350-ish range. That's good. Strong
good
for the metals.
At one point up over $25 today.
And let's say fourth push this year, because we had one back in September as well. So this is going to be the fifth time now over the last 6 months that we keep encroaching on those 1375 highs back in July or so of 2016. And once we get to 1376, that's going to be the highest price we've put in on gold since 2014.
Yeah, I think it's very bullish action, and actually I am ready for silver to lead the way. It usually does when it's a fundamental rally. When we're going to set new highs, watch the white metals, and that's why we've been telling people, let's get in on the right side of the fence into the white metals.
As well as the miners too. So we're seeing strength in the metals market today. We watched over the last few months, gold especially, because it's a good indicator, gold coming down and testing that 1300 level, and it just couldn't go down below it. And now we're seeing more strength come into the metals market, and I think that's a positive sign. We're consolidating above 1300.
Yeah, we've been in this sideways pattern. It keeps testing those 1350s and dropping back down. But every time it drops back down, it's a little bit weaker than the last one. So the longer this keeps going, the higher that rising trend line is going to get. And the likelihood of gold actually getting down below 1300, 1285, 1275, the longer this goes on, the less likely that is to take place. So as we continue to consolidate here in the 1325 to 1350 range, 1360, eventually we hit 1370, we get up to 1400, and I think we're off to the races.
You mentioned the long-term trend line. One of the things you can watch too is that long-term trend line. If you want to look at a 40-week or 65-week moving average, you'll see that those are turned up, and that's a very bullish sign as well for the long-term picture.
Platinum and palladium also look like they have maybe turned a corner. They were on a downward trend in the last few weeks and just turned up. And so platinum stopped above 900. I think that's positive.
And palladium, which was at one point down about 21% on the year so far, actually has come up about 7%. So palladium is still sitting down about 15% off that high point up over 1100. Again, giving credence to that platinum-palladium ratio that we've been harping on for 6-9 months now, and will continue to do so as long as platinum and palladium stay at parity and as long as platinum is below the price of gold. I think Robert brought up last week that platinum being at 68% of the price of gold was actually the second lowest price in the history that anybody's ever followed these pricing.
Right, in 50 years.
So in 50 years, that's the second best opportunity in platinum we've had against gold. And we're sitting at parity to palladium, which was not the case last time it happened. So continue to encourage our listeners to look at the platinum market as a good complement to the gold and silver positions you likely already have and are continuing to add to as these prices are moving into this next stage or the third wave of the bull market that we've been waiting a number of years for.
So what else is putting pressure on the metals? Okay, you mentioned that the dollar's down today, Robert. You know, we're down below 90 again at 89.4. I think I saw as a low this morning. I think it's up just a little bit. We talked last week about it maybe pressing up to that 92, 91.5 range. Haven't seen it yet. I'm not saying that it won't happen. But dollar aside, okay, dollar price action aside, what else is putting wind in the sails of the gold and silver market?
Well, there must be more buying than selling going on since it's rising.
Well, political instability always comes to mind from a fundamental standpoint. Issues in Syria, missile tests, North Korea. There's a number of reasons in the Middle East, in the United States, and in Europe, and in Asia right now that I think are all adding to a concern over international trade, and certainly a concern over the value of the U.S. dollar that we just talked about, as well as some of the other paper and fiat options out there.
Yeah, in any given week, we have to have our eye on the geopolitical, the political, right, the economic, the monetary and financial policy, and certainly with trade and tariffs. It looks like that eased a little bit. We saw a huge rally in the Dow yesterday just because of China coming out and saying that they're going to ease the pressures in the tariff war that we're seeing. and we'll see how long that lasts. But geopolitically, you mentioned Syria. Trump talking about missiles are going to be flying. Watch out, Russia. But they admit it, that it's actually the worst tensions we've had with Russia maybe in history between these two countries, and that was pretty bold. What took me by surprise was Trump's Syrian response, because 2 weeks ago he was talking about this being one of those endless conflicts and wanting to withdraw from this conflict, and now here we are, more embedded than ever.
Yeah, and on top of the geopolitical, you mentioned the Dow. The Dow's given back most of that rally already. I mean, the Dow's down today on Wednesday. The Dow continues to play between the 618 and the 382 fib that we put in on that little bit of a rebound, that started in April after a pretty big sell-off through March. We've bounced up a little bit in April, came up to the 618 fib. We've corrected back down from then. I think the Dow continues to fall. I think it's overpriced. I think it's overbought into. And I think eventually, once we get down to the 15 or 20% loss mark, because we got down to 12, we have lost as much as 12% on the Dow. That's not quite enough to get people's attention. People are still at nice gains.
It's not a technical bear yet.
Yeah, exactly. And it's not a psychological bear either. You get down 15 or 20%, and the average person is going to start waking up. Get down 25 to 30%, like happened back in 2009, 2010, the last time the stock market took a crash. And that's when the general public really just says, okay, enough's enough. And that's what causes that next 25 or 30% fall. So that's how you lose 50 or 60% in the Dow in 9 months. Gold doubles and silver triples, oil goes up, the dollar held steady because people were looking at cash positions to get into. So even here domestically, we've got a lot of factors from the economic and the political, what's going on in Washington, D.C., Trump bringing in new people as he's getting rid of old people, as well as what's going on in New York with the Dow Industrials. I think there's a lot of very negative or potentially negative news that's going to end up looking very good for all commodities across the board, whether they're industrial or precious in nature.
It's exactly why you diversify a portfolio right there, because we don't know how it plays out, and there are so many different fundamentals that push and pull on the metals prices.
Watch the ratios, watch the technicals, watch this show. We'll be updating you each week about what we're talking about. I think there are some tremendous opportunities in the metals market right now, not only just with the ratios, but actually with some specific products. If you want to talk about those, we're at 800-525-9556. Follow us on Twitter at ICA Gold, or subscribe to us by clicking the button below. Thanks for listening. Have a great week.